Alright guys, so in this video, I want to be going over an in-depth review of a Usdchf trade that I took on Tuesday, the 15th of April, that didn't end up going the way that I wanted it to go. So obviously, it's all good, you know, seeing all the wins and the trades that played out, but it's much more important to see the trades that didn't play out the way that you wanted it to. So obviously, you can adapt and make any tweaks that you need to see if obviously you can improve that for the future. So I feel that's very important. So let's go through this review. So as you guys can see here, let's start off first of all why I was seeing what I was seeing in this trade. So as you can see, if we hop to the higher time frames on the daily, we are extremely low in the market, as you guys can see. We are at these lows over here of 0.81140 areas that we actually hit. And if we take a look back of when we last hit this area, as you can see, we haven't been here since, as you can see, 2011. We have not been here in the best part of almost 14 years. So this is an extremely low level in the market. So my big point here was that we started accumulating in this area. So I was going to be looking for some at least short-term pullback buys. That was my analogy on this trade. So let's hop and zoom in right here so we can hop back into this analysis of what I was seeing. So firstly, off the bat, as you can see, we had extreme bearish momentum down to this level, literally a vertical drop. And with that, the market likes to stay balanced. So you think about a chair. Chair has 4 legs, right? If you have 3 legs, it's unbalanced. 2 legs is going to fall over, right? The market likes to be balanced. It likes to move balanced. If there's like a gap in the market or extreme volatility, it likes to usually fill that in. Not always straight away, but it does fill that in over time from obviously historical levels, and the Fibonacci retracement tool really helps with that, which is what I use here. So as you can see, we had that huge bearish momentum. So what I was looking at was kind of a retrace up to retrace this move that we've got here. And as you can see, we've been accumulating in this area. We've got some retracements up to like the 23%, maybe about a 30% level here. Well, we haven't quite hit that golden 38% level where the market likes to be deemed balanced at that level. So for you guys that didn't know, the market 90%, 85-90% of the time will usually retrace at least 38.2% of that retracement move until it's kind of like deemed balanced, and then it kind of moves obviously how it wants to move throughout. Obviously the golden ratio is the 0.618, so that's always my final target. But as you can see here, let's move this replay tool so you can see exactly where I was at, obviously, on this day. So, and what I was seeing. So let's move this back to obviously in the morning here. As you can see, I was looking for the break of this area and take the target 1 at the 38%. As you can see, we've been accumulating in this area. We've been building liquidity at the bottom here. It looks like our buyers are going to start coming in to this market. So let's play this out a little bit. As you can see here, we've come up. We have got the break and the close of the area. So break and close of this level and this high. My entry point was at this level here on the break and close. Let me zoom in a little bit more so you guys can see. This is my candle close. I was in at this level here with a stop loss there of around, you know, 40-ish pips, 40 to 45 pips ish, as you can see. So this trade ended up running. As you can see, we're running in profit really, really nicely. This looks like we're going to be going the way that we want to. We even got the close of the 23.6%, so the break above that level, which is above this previous candle high here as well. So this looks like it's going to go well to what we wanted then. Unfortunately, as you can see, we had got the rejection of a level kind of like these candles over here, unfortunately, and then started to make our way back down overnight, and unfortunately got stopped out here at around 45 45-ish pips, as you can see. So obviously, as you can see from obviously my analogy, this looked like it was going to go obviously the way we want it to go. And I'm completely fine with that. You're not going to win every single trade, you know. If we won every single trade, we'd all be billionaires right now. So the losses are great because you can see kind of what you could have done, obviously adapt from that. And then obviously see if there's anything that you kind of missed so you can implement that for the future. And this is exactly what I'm going to do on this video, because I've actually found a better setup on this pair to give us an extra confirmation to obviously up the upside momentum that we're looking for. So as you can see here, let's let this play out to kind of where it is now. As you can see, we're still like accumulating in this area, not really doing too much, just building liquidity and staying within this range, as you guys can see. So this is our entry point. We went around 22 to 30 pips, I think, as you can see here. Yes, we were about 30 pips in profit at one point, as you can see. My first target being at around the 70 odd pip mark, which would have been awesome. So obviously we didn't quite get there. So as you can see, we're still accumulating in this area. Now, I still like this for buys. I still like the buys on this, but the way that I've adapted to this is, as you guys can see here, we've actually started to form a wedge pattern. So as you guys can see here, if I pull this across, let me go down to the lower time frame here. We actually, the reason for the rejection from the other day is because, as you can see, we're actually forming a sort of wedge pattern, as you guys can see here. So we're actually following a trend line down. Look, we've got 1 touch, 2 touch, 3 touch. That's confirmed. So what we're going to be looking at now, and we've actually got a small incline from the bottom here, if you want to call it that. As you can see, we love to reject off this level here, or this level. So it's nice to obviously have this in place so we can track price and then obviously plan accordingly from the levels moving forward. So as you can see here, top to the higher time frame, as you can see, we are actually in a wedge pattern. So we still have all of this to fill in, as you can see, and it will fill in at some point. I know it will. So what we need to do is we just need to be patient on this pair and wait for the confirmation. So what I'm going to do now is, now that I've identified, okay, this is the reason why the trade didn't go the way I wanted it to go, is because unfortunately I was stuck in a pattern forming wedge, which obviously at the time that pattern wasn't there. So that's not entirely my fault. But as you can see now, we can clearly see, oh, okay, we are in a wedge pattern. So it's a ranging wedge, as you can see. There's no really upwards or downwards momentum. We're kind of just moving sideways in the wedge. Bouncing, obviously, between this throughout. So what I'm going to anticipate is, and what I'm going to wait for, is maybe this to bounce around in here a bit more. We might see a bit of this action. And then when we get the break of the trend line here, we get the close of this area, then we can take the bias to the upside, as you can see, because we would have broken out of structure and everything like that. With the same stop loss level, as you can see, we like to reject this area here quite nicely, so why not have that as a nice risk to reward ratio, and that'll be back in the wedge as well, which of course we kind of don't want anything to do with being back in the wedge. We don't want to be trading inside the wedge. Just let it play around in there, and we'll trade the breakout of when it decides to do that. So that's an extra confirmation on our play. We had the nice confirmations anyway. So obviously first confirmation was we haven't been this low since 2011, and the way that we got to that level is a huge bearish momentum, which of course is an imbalance move. And as I said, the market likes to be balanced. So we're looking for retrace moves. So we're automatically looking our bias towards buys. Just trying to fill in the area, short-term buyers momentum, right? Second confirmation is we got the break of the most recent resistance level. As you can see, when we've got into this level, we rejected this level, we rejected this level, and this is a level that I've had before. So this is actually an historic level. And for you guys that didn't know, if you guys want confirmation of if your level is strong, just look left. The history is going to tell you everything that you need to know. What's happened before always repeats itself in terms of like rejection points and stuff like that. Which is why I have obviously all my areas planned out, because then I have a full blueprint of what's going on as much as I can of what the market's going to do essentially. So we are in this wedge now. The third confirmation, sorry, is we got the break and the close above that level. That's another confirmation. And then of course we did end up going the way that we wanted it to go. But unfortunately, we got the turnaround because we were actually stuck in a forming pattern, as you can see here. But now we have the adaptation of, we've identified we're now in a wedge. So what are we going to do now, guys? We are just going to wait for this to bounce around in here. And when we get the breakout of the trend line, breakout of this zone as another confirmation, again, we're going to take the buys and obviously see how it plays out again. And of course, we have our risk management on point. We have a full plan for this trade, which all you guys should be having. You guys should be having a plan for every single trade. You should know exactly where your take profits are going to be, where your stop loss is going to be the whole time, okay? So as you can see, if we end up, let's say, breaking and closing above this level and then coming back down, breaking in the wedge and this level again, we're going to call it quits, right? But now that we've had that adaptation and we've got an extra confirmation on our plate, hopefully that's going to give us that nice movement to the upside where my take profit one is going to be at the 38%. So at this level, I'm going to take a partial on my trade, move stop loss to break even to make the trade risk free and just let this run. TP2 is going to be at this big level up here around the 50%. And then a final target, if I want to let it run that long, at the 61.8% there, as you can see, for around the total pips, if we get to that level of around 180 pip move, but I'll probably take most off at this big level here, because as you can see here on the left, we have a big sort of order block area to the left here that we could definitely reject off. So yeah, I just wanted to let you guys know that obviously, you know, you've seen my reviews of, you know, winning trades and, you know, everything's going great. But obviously, you are going to have your days where, you know, the trades aren't going to go the way that you want it to go. And those are the most important ones. Reviewing your trades that don't go wrong. Get a notepad, get a trading journal. Write down kind of, you know, why you think that trade didn't play out. Sometimes you're going to have everything perfect and the trade just doesn't go the way that you want it to go, and that's completely fine. You've got your, obviously your wins, you've got your losses. Just make sure obviously your risk management is on point. Risk management is the most important thing, obviously in the trading game. That's going to keep you in it for the longevity. Throughout, but your losses are where you're really going to improve if you review them properly. Say, oh, okay, I missed that bit. I'm going to make sure that obviously I take that into account for the future. That's what makes you the better trader. Taking your losses, looking at where you can review that, and then that's going to knock your mindset into the next level and your trading to the next level, so you can identify those things for the future. You know, I didn't build my strategy off of all wins. Obviously, I took what works, took out over time what didn't work, what doesn't work, and then obviously built a strategy that obviously we can win as many trades as possible, right? So yeah, this is a full review of the USD CHF trade that didn't quite play out, but now we've adapted. So stay tuned on my socials. I'll probably do a video on this, the outcome of this trade as well, if we can finally get it. So you guys can see that'll be a nice to look back on as a review to see obviously how USD CHF plays out. Hopefully we can get a nice entry on this. Hopefully it gives us what we want. For all we know, it could even break lower and continue lower with obviously all that we've got going on with, you know, the tariffs and, you know, all the craziness in the world right now that the market obviously moves based off, right? So yeah. If you guys want some, so yeah, give me some suggestions in the comments, guys, of what you want to see in future videos. Feel free to message me on Instagram for anything else. I'm happy to speak to you guys. But other than that, guys, let's get it.